Good morning, everyone. Richard here, and welcome to the Wednesday edition of the Morning Bell. Right, guys, before we get started today, we are trialing out a new trading room for the NinjaTrader guys, our subscribers that's subscribed to the Morning Bell. So I really do hope that that's going all right. If you can hear me okay, please drop a message or chat there in the chat box. That'll be really appreciated, and then we can get started. I'm also live streaming to YouTube as well, so hopefully you guys can hear me there as well. I'll be monitoring both chat box and YouTube, as well as the new Ninjacators trading room that we're trying today. So yeah, that being said, let's dive right into things. First off, guys, quick look at today's economic calendar. Nothing much happening out of the US. Potential high impact news events out of Canada, not something that's going to affect our markets we're looking at most likely. Then looking forward into tomorrow, the ECB press conference might be a high impact news event. And then as well as Fed Chair Powell speaking at 3 p.m. in the afternoon. So potentially volatile period that might be. And then looking into Friday, nothing out of the US. So potentially high impact news events tomorrow, potentially some more volatility, as if we've not seen enough volatility already. But in any case, let's look at the markets we're currently following for the next about 30 minutes. If you guys got any questions, like I said, do drop them there in the chat box. Anything about the analysis that you want to know, especially market geometry, you might be new to this type of technique that I'm using, then please ask and reach out there in the chat box. In any case, guys, let's do a quick recap here on the ES. Like I said, we're going to look at the ES, we're going to look at the NQ, crude oil, and gold. And I provide a bit more of an overall picture of what I think the markets are doing. Sort of a bit of a forecast, if that makes sense, as well as determining levels where we might find support, in this case with these sharp declines we've seen in the ES and the NQ. I just want to get rid of those divergence lines, and first off I'll start on the daily and then draw back down into a 4-hour chart. So since we've started let me just open this up. The Morning Bell sessions, I've shown this standard pitchfork that I've used the 3 most prominent anchor points prior to the strong decline that started beginning of this year. Now you quite often want to do this, if you especially using a higher time frame, because you'll in many cases find support and resistance at these market geometry lines, which we call in this case a center median line. That's your upper median line, and then obviously way down here we got a lower median line. So by simply selecting 3 prominent points prior to, in this case, a decline, you can clearly see that price has found support at what we call the upper 50% dash median line. Moved up, broke a little bit below it, up again, broke down, and it reached in June. I think I had a disconnect on OBS. Hopefully that's back now again. Sorry for that. Right at that upper 50% dash median line, and bam, straight down again. So this begs the question, and I've been saying this since June, that I was thinking that a correction potentially ended over here. And the way I was reading that was that we potentially very simply seen some sort of an A, a B, a C formation, and that price was now getting ready in potentially a 1, a 2, a 3. I thought a while back, last week and even the week before, we were busy with a 4th wave. Price found temporary support here around the last week of August. Went up, and this was sort of that time when the Jackson Hole Symposium came out. Fed Chairman Powell said they'll continue raising interest rates until they think they shouldn't, pretty much. And let me just get that back, sorry for that. I said price should not move into the area of where I marked my first wave. That was around about 3,950-ish, give or take. Those drawings are my way right now. That didn't happen. Price moved straight down, very aggressively. So I can't count this now as a 4th wave with a 5th wave to follow to the upside. Which begs the question, was this here corrective in nature, and it is really starting to look like it potentially was. Now, I've also given a bearish alternative count. I think I've mentioned this last week. When was it? Friday, maybe even last week, Wednesday, that I mentioned it. That I think, and I was also talking about even prior to that, that whatever happened here up into these recent highs looks very similar to what happened here. Oh, come on. A similar sort of reaction. We have price moving into a low, moved up, just managed to make new lows, moved higher, higher low, moved up, and bam, straight down. So very similar sort of chart pattern potentially repeating, and very interesting that it also found resistance at this upper 50% dash median line. All right, so that made me lead to think that if we are still going to continue down, and we'll probably know this by even today or tomorrow or by the end of this week, that we'll look at these areas right now that I've marked here with these horizontal lines. But before we do that, I just want to quickly discuss the bigger picture alternative bearish view. And if what I'm basically saying, if we don't find support and we continue slicing lower, then I'm definitely have to consider that the alternative bearish count is underway. And what I meant by that is that we've potentially seen an A, B expanded flat, and a C. Now quite often if you see an ABC pattern, that's your most common pattern, and price heads back to new highs. That doesn't happen. Then my next go-to pattern is a bit more of the complicated side of a single zigzag, or an ABC as they call it, and they call it a double zigzag, which is basically just two ABCs joined by what we call a WX wave. And I'm going to label this properly for you now, meaning that we could be seeing what we're seeing here doing the same as what happened over here, with another move to the downside, doing another big ABC like this. And where this is going to end here, or wherever the case might be, who knows. Which could potentially take us into new lows by the end of the year. Well, the end of the year is pretty close already. So how you would label that? A, expanded flat, B, and I wish I can get a better retrace measuring tool. I'm still working on that. Labeling tool, sorry. And why does it not work? But anyway, I think you may basically just go review that video maybe. That's probably going to be the better thing to do. Let's try that once more. Sorry for the hassles here. B. There we go. Then that this was what we call a WXY wave, and I unfortunately have to use this ABC. So this is a W. This entire move here is an X wave. Well, I won't say it is, obviously. Can't really say for sure. But just know how patterns typically advance. This could mean that we might see another ABC unfold, taking us to much lower prices. And the reason why I'm thinking that is because this is failure to see a beautiful 5-wave move to the upside. We were assuming that could happen. It didn't happen, unless there's some sort of a 5th wave hidden here somewhere, which I don't think is the case. But in any case, price has moved into invalidation levels. It's broken below it, and I think if we just continue falling from here, that'll be a really bad sign, and that alternative bearish count is going to become my preferred count. Unless for some reason, like I said, we somehow have a 1, 2, I don't know, a 3, a 4, and a 5 wave in here, and all we're seeing right now is some sort of a really aggressive corrective move before a much stronger move to the upside follows, that either runs the same distance as this first wave or extends much further upwards. But like I said, difficult to count a fourth wave in there. This might have just been, like I said, a mirror image of what happened over here. Well, we won't say 100% mirror image, but very close to it. So let's quickly look at where things currently stand, where price currently is. If we look at the volume profile of this move, it started in June. Let's get that snap mode off quick. To the recent highs. Then you'll see that price is sort of in this little high volume area over here. That's why I marked these two lines, about 3,908 to 3,885 and a half, plus minus, okay? We also have a retracement, I think, currently towards or at, let me just get that low perfectly, there we go. Right at the 61.8 retracement level from this move to the upside. So, this little volume area and a 61.8 fib retracement level might act as support. But again, if it breaks that, we're potentially heading lower to this volume node over here. Where's my horizontal line again? This little area over here. 3,855, around about 3/4. And then we also have the point of control right here at 3,826 and a half, which is just above the 78.6 retracement. So yeah, guys, looking very bearish, not really looking good. And I don't really have a lot of market geometry either at these current levels, suggesting that support's going to step in. The only thing I can see is that 61.8 fib retracement and a little volume area that price is currently in. Previously we had a pitchfork. Again, 3 prominent anchor points prior to move to the upside in this case. Let me just change that setting to a standard. Price may hit the center median line. We had an area of confluence that we're expecting potential decline. Obviously, didn't know it's going to be this strong. And this upward sloping pitchfork, you know, price just sliced straight through it. It even gapped through the low median line here, which is not something you quite often see. You know, it stopped right at that low median line, gapped below it, pulled right back to it, moved to this low 50% dashed warning line that we call this red dashed line, hovered around a little bit, and then just moved lower again. So, you know, I don't know, guys. It's not really looking good in my opinion. So, difficult to say. I think we potentially see a little bounce to the upside from here. For me to keep a bullish stance here or a bullish bias, price would really need to move back into this previous area that would work as support that might now act as resistance and break above that area. Let me just get rid of that, and it would need to do so impulsively, get above there, because that's the only thing that would keep this bull sort of idea that I had previously alive. And that was sort of still in my back of my mind, invalidated when price broke these levels. What was it, 3,950-ish? So I think if we get any sort of bounce up from here, it's just because of that 61.8, a little volume area that I've showed you, not so much supported by the market geometry. But, you know, if price fails to get to this area, or maybe even slice through here today, or maybe next week, or whatever the case might be, then I think price is going to target these lows that were set in June. And let me just label that for you too. And then that would really start looking like that secondary count that I showed you, the bearish one, could become a possibility. It might already be underway. Right, I'll just mark that level, 3,639. Okay, so not really much to say here, guys. I mean, it's just been slowly mucking around here yesterday, or today thus far. Yesterday we came down both on the ES and on the NQ as well. And just before we look at the NQ, sorry guys, quickly have to, sorry, I'm looking at multiple screens here. I sometimes lose my chain of thought here. To apologize. Looking at the 4 hour on the ES, I just want to see if we can have any momentum divergence showing up on the MACD. See, we have multiple bullish divergences happening here on the MACD, but as you know, if you've been trading for any extent of time, you can have divergences appear for the longest period of time, and price will continuously go into one direction. So these divergences for me are more significant, if I can say that, if they appear at areas that I identified previously. So we identified this zone previously, and then we started seeing momentum divergence, in this case on a 4 hour chart, into that area, and snap, we had a move to the downside. We had the support area that's now turned to resistance. Again, momentum divergence at an area we identified before, and price shot up, couldn't make it, and moved down. So the only thing we really have here is previous highs that we've had over here, with momentum divergence now, bullish momentum divergence, and a 61.8 for retracement. So nothing much on the market geometry side of things. So yeah, I just want to show you what I'm seeing on the divergences before we go to the NQ. Let's go to the daily first. And here we had a strong bearish momentum divergence on a MACD indicator right at the zone, similar to how we identified a zone on the ES. Appeared on the daily in this instance on the NQ, and snap, we had a move down to downside. We had a support area here, was a volume zone over here. We also had a little bit of support on the center median line. Price moved up, broke straight down below it again, and we don't really have any support on a market geometry perspective. At the moment, other than price reaching the 61.8. Found temporary support there, but broke below it yesterday. So yeah, also looking very bearish, right? So not really much to say on the NQ, guys. I think it's all about watching what happens this week. We continue strongly lower, than I really think that those alternative bearish counts are going to become my go-to counts, and then trying to see if we can spot any sort of short setups in the longer term, unless price starts shooting and propelling up to the upside here. And that's one thing I quickly want to mention before we look at crude oil. If somehow this was some sort of a first wave, or maybe an A, and let's say this was a second wave, and price is now going to shoot up to the upside, then you'll expect that your third waves generally materialize, that they move very fast, and that they're impulsive in nature. And we'll see that in the price action, but it also needs to breach previous areas which now might act as resistance. So whether this is an A, a B, and another C, and then we see a move down, price will have to behave impulsively. And all I really can say before ending this, and I've probably said this many times before, is that if price continues moving lower and support doesn't step in very soon, then we'll have to side with that bearish alternative counts that I've proposed on the ES. Okay, how are we doing with the sound? Everything's still okay there? If everyone can hear me all right? I just want to check here if we got any questions on the streaming side on YouTube. And then we'll look at crude oil and finally gold. All right, let's go to crude oil. Oh, no, that's the wrong one. There we go. Let's give that a little while to load. And guys, if this is the first time you've seen crude oil here on my screens, it looks very messy, right? It's just because I dropped in a lot of lines last week that I didn't want to see broken to the upside, i.e. that one. And this little green area that I got here on crude oil, sorry, is basically just encompasses a lot of areas where previous lows materialized and support stepped in. Now it's tested this area once, arguably twice, 3, 4 times, or 1, 2, 3 times, and it's now moving low into this area 4th time again. Now, quite often you'll find double bottoms, double tops, triple bottoms, triple tops. Very rarely, I think in the bigger picture, mostly on higher time frames, you'll find quadruple bottoms, quadruple tops. So it's almost as if price keeps punching an area, it gets weaker and weaker, and finally you see a break below it. Now, for the longest time, I've been saying that I think these lows in April, which is at 84.48, this is now on the October contract, and this low was set in, what was it, March, 15th March, 83.65, will potentially be reached. It still looks like that's possible, but really from a swing trading perspective on a higher time frame, you really would have need to know your stuff here. I mean, look at this crazy, insane up, down, up, down, up, down, up, down, up, down. In the bigger picture, I've been saying for a while that we're potentially just seeing a corrective move to the downside. Yeah, I've got this green pitchfork. Quite often like using the shift pitchfork setting, which is what I'm using over here, when I think I'm dealing with a correction. So let me just get rid of this zone so you can see a bit clearer over there. Meaning that this could potentially have been an A, B, C, B, failed to take out that high, and price again on a few instances failed to take out this year's lows here, March and April. If it's finally going to take them out, we might see a move towards this lower median line, which is at 79.71. And I know I've been saying this for a while, but I mean, even this pitchfork here, it's like price respected it pretty well a few times. One occasion, 2 occasions, broke above it a little bit. It's really cool here if you run a ray parallel to one of these median lines where price overshot over here, did it by the same distance when it overshot that line again, which is pretty cool to see on market geometry. It happens very often. More recently, when was this? Last weekend of August, price pulled back into center median line, got rejected again. So I really do feel this time. I've been saying this, like I said, probably sound like a broken record, that we'll probably see 84.48, 83.65 broken soon. Not much on the divergence side of things, but then again, a difficult spot, proper momentum divergence signals in a very messy market like this. And again, guys, hopefully this is not a correction, because we don't want to see price heading back up higher again. You know, I'm sure everyone's been feeling it in their pockets with these high gas prices. Cost of food goes up when gas goes up. You know, everything gets affected. So, but I can't help but thinking this extremely messy price action that we're seeing looks corrective. Could also be that we're in some sort of a long-term fourth wave sideways sort of ranging market. And then we see a fifth wave at a later stage, who knows when. But for the time being, until we start seeing some really strong impulsive behavior, then we might have to just consider that whatever this whole bloody mess is just some sort of corrective structure. Okay. Cool. How are we doing for time? We've got a few minutes left. So yeah, guys, crude oil, I still think we can reach those levels. But who knows if it's going to do it soon or not. I'm not trading crude oil on the swing trading time frame at all at the moment. Okay, before we finish things off, let's lastly look at gold, and then we'll call it for today. Right. Gold. if you look to your right over here, I proposed previously that whatever started happening here when we've seen this massive high here in August 2020, that this potentially was, or still probably is, an expanded flat correction. We have, in this case, a very complex ABC for an A, which runs in 3 waves, a complex 3-wave move to the upside, and then some sort of a 5-wave move to the downside to complete the corrective move, and then we start seeing a bounce to the upside. Now, since we followed this, or started the morning bell sessions, I think there was good evidence that potentially a 5-wave decline, you can beautifully count as 1, 2, 3, 4, 5, i.e. this final move here, 1, 2, 3, 4, 5, completed, and we had a strong bounce to the upside. My only worry was that when you deal with expanded flats of your C waves, generally extend much further down or below, generally I would say. Not always, right? Come on. Below the area of where you proposed your A wave was. That just did not happen. It just breached these lows and then bounced up. Technically, that could have been a beautiful C wave. But yeah, as soon as I said that, price moved into a previous area where there were lows, broke support, turned into resistance, and wham, straight back to the downside again, which makes me think that if this is a 5-wave pattern still, and if this entire messy potential explanation of what could be going on since this high in 2020, I still think it is corrective in nature. But if this is some sort of C wave that's still underway, then it could still potentially move much lower. So, same thing with gold. We'll have to start seeing either a break of these lows that were set in July. And I think if that happens, I can set some more targets to the downside here. But similar thing here, we have a 1, 2, 3, 4, 5 wave move to a downside on a smaller scale. When was this? On the 1st of September, price came extremely close to breaking the July low. I mean, it just reversed from it a few dollars, almost reached it and moved to the upside. So yeah, it's difficult to say if this was a low that this is some sort of correction, because it just came so close to these previous lows. Still looks very bearish on gold in my opinion. I think potentially see a break of 16.96 and 50 cents, which are these lows. Is it? No, it's not. Let me get that snap mode on properly. Yeah, 1696 and a half, 1696 and a half. So potentially could see a test of that. We have no momentum divergence yet on a smaller time frame at these lows, and yeah, still think bearish for gold. Guys, anyway, I think by next week we're probably going to add another extra market, potentially look at the euro. If you guys are interested, let me know in the chat box if you are. Like I said, we have such crucial levels on the ES and the NQ that if they don't start seeing bounces soon, that we'll use that as our guide to basically start calling some shots to the downside, see if we can see some extensions or play some targets or projections to the downside and see if they're attainable for us. All right, guys, I think that does it for today. If there are, like I said, any more questions, please let me know. If not, then we'll call it quits for today. And then, as always, I'll be back on Friday, same time. And then, yeah, I don't think there's any questions coming in. So, guys, have a good one over there, and I hope you all have a fantastic rest of your week. And I'll see you again on Friday. Until next time, take care and Goodbye.